welcome to another closing bell for the week ending 30th of April 2013. First of all, let me apologize last week regarding about the closing bell where I was supposed to do one at 5:15 p.m. but was not able as I wasn't able to get to my computer. There was very limited uh, internet access from where I was at that time, and so I did not do a live one, so I did a recorded one. But this week, it's different. We are doing a closing bell live for this week. Now, as you can see, this is a totally different week. Everything is green, right? And since then, the market has rebounded. Now, last week, if you look in the scheme of things, please ignore this volume bar here. Apparently, it seems to be a spike on my. There you go. You see, it's now okay, but when the last bar refreshes up, then that's where I get this problem here. Okay, so that seems to be a problem. I'm not able to fix it yet. Now I lost my bar. Now the best way to do is actually change this to an 8-hour bar chart. And then I change it back to a daily chart. That should work, hopefully. Okay, just make sure it don't crash on me. Okay, seems a bit slow. Is my sound coming in okay? No, that's a problem. Okay, what I do, I'll just delete this. Oh, there you go. And I add one more. I think that's the only way to do it. I think it's a memory kind of thing. Add top. Okay. Okay, there you go. And I will add the apply. Sorry that I have to do this. Okay, there you go. Okay, it's much better now. But let me just draw my trend line that I have. Okay, which is to me quite a steep one. Here I go. And another one is this one here. Okay, good. Now, last week, let's look at last week where we were last week. Last week, this is Friday, Thursday, Wednesday. So last week we were here. At that time, I could only mastered as well before looking back at my notes that I did say here that it was oversold the last 3 or 4 bars. Now sometimes the market can oversell for many bars, like we saw it here. 1, 2, 3, 4, 5, 6, 7, 8. 8 bar before it rebound, which is quite normal. That's what we said is oversold over 3 to 4 bars, and we were looking for a rebound. Even if it's a rebound, it is likely to test 1700 level here. As I said before last week, there is a chance that the market will test 1700, and it did. We tested 1700, it gaps down, and very quickly it was only down for 1 day, and yesterday the market rallied almost 20 points, and today we are up another 19 points. So it does mean local institutional are coming to support. As you can see from our daily foreign funds movement, you could see there is a lot of selling by the foreign funds. I think yesterday was about 300 million, the day before about 700 million, and the largest we have about 1 billion in here. So they are exiting. Now you may ask the question, when are they coming back? As I said before, the hot money tend to move out. They may not come back at all, but those who is longer term have a longer perspective on the growing so-called middle income nation like Malaysia, Singapore, and Thailand will stay invested in this. So fear not. Then these are the companies. That's why I said if you are investing, definitely you want to be putting on a company that is high quality that pays a reasonable dividend. So having said that, the market has rebounded as you can see here. But I just want to show you another thing is the weekly chart here. Okay, you can see from weekly chart, we do have finally the first time a doji. There you go, one here, and you have another resistance in here. So it is still holding up above the pre-general election, the 13th general election before the market gaps up. So that tells you the market, it is still pretty much on the up mode scale, and this temporary downfall or sell-off is, in my opinion, is just temporary. Now, I have published the September 2013 stock market comment, which is talking about, I should go over and check it out today. It's haven't finished yet. I just wrote the first part as I'm forming my thought. Is the September 2013 comment, which is looking for a safe harbor in the midst of a storm. So that is the theme for the September month. And I'll give a couple of reasons why this is not, and I repeat, ladies and gentlemen, this is not a second Asian crisis. There are several reasons in there. I give them, so go in and read them and give me your feedback and give me your comment, what you think about that. Okay, so that requires a bit of reading on your side, and it's a good so-called economic discussion for that. Now that's on the weekly. Now going on to the FBM 70, which actually look at the mid cap and small cap or KLCI. You could see the, although we don't have volume here, this is a nice toolbar. We have what we call this called a selling exhaustion, or potential hidden potential buying. As a selling in here, it was exhausted, broke through it, but it is still holding above the 200-day moving average. Partly this is very easy to explain because the mid cap and small cap are generally held by the local institution, not so much by the foreign funds. Now if you compare that with the foreign funds, now this one you can see it is tweaking below. Let me just show you the daily chart. You can see it did went below the 200 moving average, came back up again, now retesting in here. Going forward next week, I think at best it will test the old high at 1740.